Hi everybody, I'm John Farley, and I'm the Managing Director of Gallagher's Cyber Practice. And today, I'm joined by one of our cyber experts, Dan Burke. Welcome, Dan.
John, great to be here.
All right, so we're excited today to talk about our upcoming publication of our Cyber Market Outlook for 2026. So the 2026 market is going to be an evolving one. We are concerned about emerging threat landscapes. We're also concerned about the regulatory environment that moves almost in lockstep with the threats. And of course, the cyber market. The coverages that we're seeing are also very dynamic. So Dan, let's dive right into it. What are you seeing around some of the threat landscape? We're talking about ransomware, as we tend to every year. So what are the emerging trends around that?
Ransomware is one of those topics that just has lasting power in our industry, right? And I think it's felt by companies of all sizes. And today, what we're seeing is targeted attacks towards specific companies that have double and even triple extortion. So what we mean by that is not just getting access to your network, taking your data and trying to sell it back to you. And it used to be encryption, right? Today, it's stealing the data, exfiltrating it, and trying to sell it back to you, or having you pay a ransom just to keep your name out of the news so that they don't go public that they've gotten into your network. And it's a problem for a lot of companies. I don't know what you're seeing or how you think companies are responding to this. Is it getting any better?
Yeah, well, I mean, obviously, we used to say have a backup, right? And if you have a backup, you can just bring that data back and you don't have to pay a ransom. But now you're worried about that data being publicized for the world to see. Yeah. So it's a really hard thing to navigate depending on what that data is. Is it intellectual property? Is there non-disclosure agreements in place that prevent me from letting it get publicized? So now I have a liability beyond everything else that I'm dealing with. So it's a very complex situation today, given the threatening to publish it.
Yeah. And I think one of the things that we've noticed with our clients is that fewer and fewer are actually paying the ransoms, right? And that's probably for a couple of reasons. One, they do have good backups, like you mentioned. But two, that threat of public humiliation is sort of dissipated over the years. Almost everyone gets hacked these days. And to know that that's an inevitability almost is sort of comforting in a weird way. Companies can feel comfortable that they're not the only ones going through this. There's not as much shame as there used to be in being attacked.
Right. So let's move on to social engineering. Now, we're used to phishing attacks, right? But now with the emergence of deep fake technology, right? Threat actors taking existing video of you or me, right? And taking that video and making it appear that you did or said something that you never did. That is sort of really an evolution that I think our customers, our clients have to be really worried about. This is not an easy phishing email to pick out. I always say it's not your father's phishing email, right? That's the term, because in the old days you could say, well, the grammar was poor. You could just pick it out a mile away. But now you may have the voice of your CEO on your voicemail asking you to transfer $1 million because we got a deal going down. What are your thoughts around social engineering in today's environment?
Yeah, it's getting harder and harder, right? And especially with the rise of deepfake, not only the AI tools that are coming out with video capabilities. I think some of the things we're seeing are companies are unprepared for the level of sophistication that they're seeing in these attacks. And two, just the sheer volume of attacks that new tools are able to produce to really target companies. And it's coming through in a number of different ways. One, I think funds transfer fraud is a real problem. So stealing money, or not just stealing, but having money transferred out of the company on purpose because an employee was duped. Two, business email compromise, which I know leads to a ton more problems that you've seen in a bunch of your clients. But for me, it's one of the biggest issues that companies face is when attackers get access through an email account and login credentials, they move laterally, they cause a lot of problems.
So we can't talk about cyber risk without talking about AI risk as it relates to cyber. So in 2026, we know this is going to be a major topic. So what are your general thoughts around that?
AI is taking over the world, right? And if we think about 2024 as the year of introduction of generative AI specifically, 2025, the year of adoption, where a lot of companies started taking those tools and ingesting them and starting to use them. 2026 is going to be the year where companies really need to get their arms around how they're being used and the way that they can manage risk around AI. Yeah. And so when I think about AI and the risks that are coming, there's a ton of platform safety issues that are going to need to be addressed, whether it is bias in the data, whether it is some of the copyright infringement issues that we're seeing around training the data sets and the large language models. All of that stuff is going to pop its head up in 2026. And for companies that are using AI, they're not even really thinking about that stuff yet. And so to me, there's a difference between the companies that are developing AI tools and those that are consuming AI tools. And when you think about companies that are consuming AI tools, what comes to mind? What are the things that you're highlighting for them and thinking about for their risk?
Yeah, I mean, virtually every sector is adopting AI, and they're rushing to adopt it, and they're not really thinking about the risks associated. So that's what concerns me. So now think about the different sectors. We pick healthcare, right, where you have a healthcare organization using it to give medical advice not to one patient, but to thousands of patients. And if the output from that platform is erroneous in any way, you could be giving the wrong medical advice, and very bad things can happen, not to one patient, but to thousands of patients. And so you think about the frequency of loss and the severity of loss from an AI-driven loss. It's really mind-blowing. You can go beyond healthcare. You look at every sector out there, construction or architecture firms that are using it to build buildings, right? And if you're relying on that as being correct, it may not be, and a building may fall one day. It sounds extreme, but that's where we're headed. And so you have financial services companies, banks who are deciding who gets a loan and who doesn't, pulling in data and making decisions for you. You may be discriminating against a whole demographic and not know it. And now you have an EPL claim. So you start to think about the potential losses, whether it's bodily injury, discrimination, you name it. And now you have losses that traditional lines of coverage may or may not cover. So I start to think about the market. I start to think about, who is going to cover that loss? Are they excluding it? Is it really like silent cyber was a few years ago, where it wasn't excluded, but it really wasn't meant to be covered, and they had to cover it, and then they ultimately excluded it as time went on. So curious what your thoughts are there.
Yeah, so I'd say from a market perspective, we're following a similar pattern that we saw in the cyber market that you just mentioned, right? Exclusions start popping up specifically around property and casualty, general liability, and sort of carving out this area of we're not equipped to handle this risk, and we don't really know how to get our arms around it, so we're just going to exclude it for now and let someone else figure it out. To our benefit, I'd say, the cyber insurance market developed out of that exclusion. And I think what we're seeing in AI right now is actually the cyber insurance market being really welcoming to some of that risk and taking on the challenge of helping companies solve this risk. And so when you're talking about solving AI risk, I think you're talking about dealing with the severity issues. So the proliferation of an error going farther and wider than it could when it was just humans doing it. That can be dealt with through limits management and understanding what your potential exposure is and really adjusting your limits to address all of your exposure generated by an AI tool. Two, I think you're talking about security basics and security controls, right? An AI hacking tool is going to find a vulnerability that you have sitting on your network. And if you know about it and you aren't acting on it, that is going to be a problem because the AI tools will find it very quickly.
Yeah.
So to me, the security basics of let's nail our basics and have this done is a great risk management technique that companies need to be adopting and making sure that they're blocking and tackling and the security basics are handled. Three, I think that, when I get into thinking about AI risk, it's really around third-party risk, right? How are we managing all of the different third parties that we are either sharing our data with and all the privacy concerns that might be with that, specifically for consumer companies. If you think about the collection and use of data, the sharing of data, that is a big issue that we're seeing claims-wise in the cyber insurance space. So how does that apply to AI companies or AI tools, right? And so the data that you're collecting, are you disclosing it properly? Are you getting consent to share it with AI tools? And do we need to call those out specifically in some of our privacy policies? I don't know the answer to that, but I do think it's a good question to ask in a way that companies can think about getting their arms around this risk. But that's true for any kind of third-party service, right, or tool that you're using. And I think it begs the question, what should companies be thinking about when it comes to third-party risk? Because that's a huge aspect of cyber risk today is third-party risk management, how you're getting your arms around not just the security of vendors that you're allowing onto your network or to use your data, but the privacy implications, the liability issues that pop up. And I don't know how you're thinking about that when it comes to third-party risk management.
Yeah, 100%. I think it's got to be embedded in an overall vendor risk management program, right? We've had that in cyber for some time now. But now you may have contracts that you got to take a fresh look at, right? What is my vendor doing with AI? Are they adopting it? And if so, how are they managing that risk? Because it may ultimately find its way down to me in terms of a loss. So the downstream effect of a vendor not performing proper risk management around AI usage can affect me, even if I've got my house in order. So it's really important. And it actually bleeds into, data governance, having a robust data governance plan around AI usage. I think a lot of companies that have rushed to embrace AI in the last year or two Have they really looked at their data governance plan, right? And what does it say around usage, around adoption, and all the things you're doing that you just kind of outlined that you should be doing around the adoption and the risk management of it? So really important to look at your policies and procedures today, right? Because you probably adopted it yesterday. So, that's where I'm thinking.
And that's true in a lot of areas, right? People are rushing to adopt these tools. They're cool, they're new. Everyone's talking about AI and using it in all the ways it can be used, right? The ways it can add to the work product that humans are able to produce, right? And now I think we're getting to the point where the backlash is going to come, the liability issues are going to come. And to me, 2026 is going to be all about managing the risk that AI is presenting within your organization.
Yeah, 100%. And I think what we also have to do is take a look at our business continuity plans, right? Or our incident response plans. So we're prepared for maybe a ransomware attack. We know who to call, what vendors to use, who's going to do what internally. But what happens when your model goes sideways and suddenly you have a bias situation, or you have a med-mal claim, or you have any other loss? You're going to have to figure out where it went wrong, right? Who is the person you're going to call to say, here's where the model started learning some bad lessons and kicking out some erroneous outputs? And so you'll need experts to help you do that. And it's really important today in light of the regulatory environment that's happening. So we're seeing multiple states adopt, different rules and regulations around AI. They're focused on transparency and fairness and basic protection of human rights. And one state in particular said, hey, if you have a bias situation, you need to call the attorney general and explain it. So who's going to do that, right? Who's going to explain where the model went wrong? The black box nature of these platforms is onerous, right? And are you going to point to the provider? If it's a provider providing it for you, the AG probably won't care about that. They want answers because your clients got hurt as a result of the output that you trusted. It's an agent of your organization. So these are all things we've got to start thinking about, and think about an AI incident response plan.
Yeah. And it starts today with one AG maybe, but if it follows the same way that data breach laws did around the United States, pretty soon we're going to have 50 different attorneys general that you're going to have to talk to about how you're managing AI risk or about something that went wrong. And I think it just bodes poorly for the risk around AI and companies rushing to adopt some of these tools. Not to say that they shouldn't, because the power of AI is immense, right? And it will be a great tool for so many, but there are risks that come with it. And I think gaining awareness and understanding how best to mitigate that risk is going to be a big topic for 2026.
All right. So we have a lot to cover, and I want to shift to some other cyber threats outside of AI, but the supply chain attacks that we've seen, right? Major cloud providers have gone down. And it wasn't necessarily an attack, it might have been a glitch, right? So you've got these cascading losses that occur, and it could be a software provider, it could be a malicious attack, whatever it is, but I could be relying on a vendor. I have my house in order, but that vendor may not. What does that mean in terms of risk, and what is the market doing around that threat? Because I don't think underwriters necessarily have insight into, at least deep into the supply chain. But regardless, those attacks in the supply chain may make their way to my doorstep, whether I'm attacked directly or not. So what are your thoughts there?
Yeah, I think third-party risk is your cyber risk today, right? The amount of vendors that companies are relying on, whether it's cybersecurity or supply chain or whatever it may be, is massive. And so these long lists of vendors, all of them have differing levels of cybersecurity. All of them have differing levels of contractual requirements that you're signing up for. And so to me, there's a massive risk around third-party risk management and just how you're mitigating all of the potential issues that come to light when you're sending data to a third party or when you're relying on a third party to operate your business or service, right? And so to me, managing your cyber risk is managing your vendors. There are a number of tools out there that can help you assess vendors as far as how they are from a cybersecurity perspective, how their finances look, to make sure that they're not going to go out of business, right? And so leveraging some of these tools to really get your arms around how much I'm relying on these companies and what happens if it goes wrong. And I think when we talk about mitigating third-party risk, it's really mitigating the impact to my company, right? And that's what I think clients should be focused on, is not just scoring a company on cybersecurity or your reliance on them, but scoring how much the impact would have on you if they were to disappear or go down for any amount of time. And to me, that's really where third-party risk management is going to move, right? It started with contracts. It moved to scoring cybersecurity. Today, it really needs to shift the conversation towards how am I going to adjust my operations or my supply chain if something were to happen? And how quickly can I get back to full speed for myself?
So with respect to supply chain risk, one of the most important coverages is contingent business interruption coverage, right? To help transfer some of that supply chain risk. So could you give us a little background on how that works, what the coverage does?
Yeah, that's a great area where the cyber insurance market has adapted to the reality of claims that have come in the door and adjusted coverage to make sure it's meeting clients where their needs are. So contingent business interruption, you're talking about not yourself having an outage, but someone that you are dependent on to operate your service or product going down or having an outage on their network that is impacting your company financially. And that's really when you're talking about contingent business interruption, the coverage that we're talking about.
And so lastly, I want to talk about one driver of claims that we've seen probably the last 2-3 years, and that is the non-data breach wrongful data collection claims. So it doesn't have anything to do with threat actors. It's more of you're not compliant to certain privacy laws around data collection, data sharing, data storage. So pixel tracking, for example. So can you give me some color around the litigation landscape for wrongful data collection, what we're seeing?
It is an issue right now that all carriers are dealing with for sure, and our clients are dealing with because there's this discrepancy between marketing teams and the information that they want to collect and use to help make the service more tailored, whether it's to consumers or to other companies or buyers of their product or service. And then the IT teams that are in control of what data are we collecting, how are we storing it, how are we securing it, and then the legal teams that are saying, are we disclosing this? Are we getting consent? Do we have to have opt-in or opt-out? Where do our regulatory issues lie and requirements lie to make sure that we're doing this all correctly? And I think the issue that we're seeing is a really creative plaintiff's bar pulling back laws from the 60s and 70s sometimes to really go after companies that, well-intentioned, started using some of this technology, but didn't quite think through all the steps they had to go through or the ways that a claim may be brought. And so we're seeing claims for the California Invasion of Privacy Act. We're seeing claims for a number of different laws that are on the books that are coming to bear and going after companies of all industries that may not have thought about themselves as having a pure cyber risk, right? They may say, oh, we don't have a ton of data on people, or it's only our employees, but whether it's biometric information of employees or whether it is consumer information for people visiting their website, we're seeing a lot of these claims come around this pixel tracking and just generally collection of information without consent or without disclosure of what you're collecting and how you're going to use it.
And so carriers may exclude it, although they may cover it subject to strict underwriting requirements. So you better be prepared for some questions from underwriters around your collection practices, right?
For sure. Carriers are addressing this in a number of different ways. There is zero consistency in how this is addressed from form to form. And even when we're negotiating coverage, I think we are arguing to have it covered at a blanket basis, but each carrier is doing that differently. There's a ton of nuance in the wording and how they're actually applying that wording to the claim when it comes in. So for us, it is inherent that you need an expert producer that knows what they're doing when you come to talk about issues like these non-breach privacy issues. Having an expert that understands the language and has been through some of the battles of having claims that are maybe denied at first or really arguing with the carriers about how coverage should apply and how liability or cases are brought and pled and how that triggers coverage. All of those battle scars actually make a big difference for a company like Gallagher, where we can take those claimed learnings and apply them back into our broking process to really benefit all of our clients that they know we can get coverage for them on their behalf.
All right, Dan, that was a lot of great information. Thanks so much. Really excited to put this all out in one publication in our 2026 market outlook. Excited to do that. I think it's going to help our clients understand the risk and transfer the risk. So thanks for your time today.
Absolutely, John. Thanks for having me. This is such a dynamic risk that is impacting so many different companies. And so I think examples of this where we can display our thought leadership and really give insights to our clients are fantastic. Appreciate you having me.